A couple weeks ago, I made a video about the gap up and retest of previous day high strategy on the stock that went from about $5 to $8 in a single day, which is about a 50% gain, not bad. People that watched that video though, shout out to you guys, were able to identify the same exact setup that happened today on a stock that went from about $20 to $30 per share, also a 50% gain. And they were the same exact strategy. We'll be breaking down exactly how to find stocks like this every single day, how to plan this type of setup so that you're better prepared to take the risk, and most importantly, how to take profits at the top so then you can get the best entries and exits possible. And if you were part of that unfortunate bunch that missed that past video and consequently missed this stock, be sure to subscribe and hit that bell icon to be notified of future videos like this. With that being said, let's get into the lesson. So first off, real quick, just a refresher from that last video about the gap up and retest setup. So as the name of the setup describes, you have to have a stock that gaps up over the previous day high and then retests it after market open. The reason why this is such a powerful setup is because it creates a day two short trap, right? If you've been following people on Twitter or you've been following people like Tim Grittani, Steven Dux, those big short sellers, they have a setup called the day two short, where they look for stocks that are very overextended and they want to short at that market open, hoping for an all-day fade. Now, this setup works great, but the issue is that so many short sellers are too greedy and they don't have a grasp of the bigger picture. So instead of covering before it hits that previous day high, they hold and hope for it to go even lower, so they never lock in the profits. And then when the stock does bounce, they might double down, add more shares short because there's no way the stock can squeeze just for them to get blown out into new highs, right? So this is a perfect short squeeze setup. And if you know anything about me, short squeezes is what I specialize in. So here we can see on ACON, this stock had a previous day high with decent volume. And then the next morning, you can see this big gap up, right? Went from $5, gapped all the way up to $8 per share. That's where you can see massive short selling happen, right? Huge rejection candle, huge red candle halted down. Everyone's panicking. And what happened was that once it retested that previous day high as new support, of course, it held, right? Because you have to think about those people that sold on day one, they got gapped up on. They're now down $3 per share on their short or their sell. Once it gets back down to their short selling price, they're going to want to cover. And that's going to influence buying support. And then there's people like me that have this setup that are going to want to buy that support. And so it's a very simple thing to plan. The way that you plan a trade like this is you have to go long at that previous resistance as new support. You take the risk into it because you don't know if it's going to work, but if it does, it's the best entry possible. Your max loss, you pick some level. Here in this case, we chose $4. So we're risking about $1 per share. And then our first target is just that first intraday resistance. Up here, it's at 720s or $1. So you're risking about $1.20 to make about $2. That's a good trade. Not to mention, if it can break out and squeeze, it's going to be a likely supernova because you have those day two big short sellers that are trapped. Now, this one wasn't able to squeeze, but it came damn close, hit a high of 850. That's a gain of 50% in just a single day off of a very simple setup. So this is the gap up and retest of previous day high. The key things you need to have, though, is that previous day high should have decent volume. You can't see it here because the chart's all squished down, but you can kind of tell that, there was notable volume there, right? It wasn't just a dead random spike. It was a notable spike that had sellers. That's key because you want to have those first day shorts covering at their break even to influence that buying support once you get into it. And then number two, you want to make sure that the risk reward actually makes sense. Like I said, risking $1 to make about $2 is a pretty good trade. For my risk reward, I like to have at least 1.5 R, if not greater. Look at my past videos for more context about why I like that. So now here is the stock that did the same exact setup today. It does look a bit different, but bear with me and I'll kind of break down why it's the same exact setup. But you can just see previous day high is pretty obviously right near $20, 1982 to be specific, right? It had a big spike on that day, had active volume, Technically, this wasn't first green day. If we go back a bit, we can see that it's had some active trading volume. So it's been actively trapping shorts. But yesterday we had a big influx up, huge spike up. And then in after hours, it gapped up like crazy. It went from $20 to $35 per share in like an hour or so. So huge gap up, right? And then you can kind of see those same things happening this morning, right? You see those day two shorts entering, right? Classic weakness at market open. Everyone's selling it, taking their profits. You see this nice classic sign of short sellers selling into that, rejection of pre-market support as resistance. VWAP is there as well. And all the day two shorts are looking at this as, man, this stock is up so much. It's from like $15 to $30 in just overnight. This stock shouldn't be up that high. It's going to be a big fade. And they don't have the context. They're not focused on the context that previous day high can act as really good support. And you can just see, look at that bounce. It did the same exact move as ACON. Not to mention, the risk reward here would have been even better because your risk, next support lower, is like at $15. So you're risking about $5, $5 per share to make about $13 plus, right? You always have your first target as that next intraday resistance. Here it's at 33.82. So you can see that's a level that you could plan to just have a limit sell set at right away and just leave it there once you get your entry. And look at that. It was able to spike up and test into it pretty much perfectly. One big tip I always recommend is that if you have a planned partial target off of a daily chart level or intraday level, don't go for it exactly, undercut it. It's worth it because you'll have a better degree of getting filled. And same thing when buying support. Don't try to get exactly in at that support, overbid a bit. So then you have a better chance of getting filled. Just understand the extra risk to it. Now, something that's very interesting about this and something that I talk a lot about in my Trade Buddy course and in my chat room is the significance of daily VWAP levels, right? Because I am so much more of a volume analysis guy. I have a huge degree of confidence in the idea of using daily chart volume to understand if there's big picture shorts trapped or big picture bag holders. And we can see that back here, we had a very similar massive spike back last year in July. And if you look at that line chart, there's a big VWAP sticking up right there. You can see right there, let me delete this. Right there at about $20.70. If we just draw that daily VWAP as a nice thick line, make it very clear, if we go intraday, look at where support overall held. Exactly off that same area. Because those past short sellers or those past bag holders are no longer going to be a big effect, and it's going to influence as new support. And it's nice how that coincides very nicely with that previous day high. So just an extra degree of confidence to take this trade. Very nice gap up and retest setup. Not to mention, if you kind of look at it now, I'm not a big proponent of patterns or whatever, but you can't ignore or you can't deny the fact that this looks like a pretty good inverse head and shoulders. Look at that, previous shoulder, that bounce was the head, new shoulder holding. This looks pretty damn bullish, and I would not be surprised whatsoever if this sees a bigger squeeze. And if it does, easily $50 plus. I would not be surprised whatsoever. If we look back at the historical chart, it has that potential, right? The next weekly chart resistance is about 42. We can easily test that. No problem whatsoever if it can fuel that extra short squeeze. And that would be all-time highs, right? Yeah, that'd be all-time highs. So over 42, the sky's the limit. So keep in mind, okay, no, actual all-time highs is 59. That's a good target. I wouldn't be surprised at all if this hits $60. If it can break out over today's highs, we would definitely see a big squeeze. So that's the setup. Gap up and retest of previous day high. It doesn't happen every single day, but as you can see, if you can stay patient for setups like this, you can grow your account super, super, super fast. Main things to focus on when it comes to this setup is that previous day high cannot just be a random no volume day. It should have significant price action there. Number 2, take the risk into that support. Use the TradeBuddy Trade Planner to calculate your size. Check out my past videos for more context on that. And number 3, use intraday levels to plan your targets. And then also go to the daily chart to get extra context, right? The main issue that so many traders have is they're so zoomed in. They have like blinders on where they're just focused on the intraday 1-minute chart. Zoom out. Trust me, very worth it. Anyways, that's all I got for today. If you enjoyed this video, give me a thumbs up. Leave a comment down below if you have any questions. If you want to join me and my team at TradeBuddy, we have a free 2-week trial. Get access to the course, the chat room, the daily webinars every single day. Check it out, and I'm sure you will not be disappointed with the content that we have. With that being said, see you in the next video.